Good afternoon, everybody, and welcome to Legacy Club's first ever cryptocurrency event. So it's a subject I know very little about, so this is as much as an education for me as it is for you, I hope. I'd like to welcome our guest, Peter Bryant, who you'll be hearing from today, also known as the Crypto Professor. Peter will be going through Bitcoin, blockchain, and beyond, and demystifying the myths around Bitcoin and cryptocurrencies, and hopefully a lot more besides that. I know there are some people that are professionally into this sector, and there's some people that are dabbling in this sector. It's a real hot topic at the moment, and I hope you do enjoy the content that we're going to give today. Just to give you a little bit more, I'm the founder of Legacy Club. We are an entrepreneurs community, a first of its kind, offering members support, a network, an ecosystem, and unrivaled members' privileges. The whole point of why we exist is to support startups and scale-ups on their journeys, individually and as people and as business leaders. I'm going to play a very short video for you in one moment, just to give you a bit more about what Legacy Club is around. But just a little bit of housekeeping. We are going to offer up a Q&A towards the end of this session. So the main session will be about 45 minutes. So if you do have any questions, we are saving them to the end, if you don't mind, because Peter may already cover those in his talk. On the right-hand side, you will see a questions icon and also a raised hand icon. Please do use either of those or put your question in the chat at the end or at any point, and I will moderate those and get those questions to Peter for the last 15 minutes Q&A. Please share anything you wish to share in the chat, so you can put your LinkedIn profiles, your connected profiles, whatever you wish to put in the chat so people can connect to you further. And at the bottom of your screen, you'll see some emoji icons. So if there's anything you hear that you like, that you want to praise, laugh, whatever it is, please do use them. I hope you enjoy the event. I'm going to hand over to Peter in 1 second. I'm going to play you a very short video. But thank you and welcome again for joining us. That's it from us. Over to you, Peter. Thank you again for joining us and welcome to everybody.
Fantastic. Thank you. Right. Hello, welcome. Thank you very much for joining me. I'm here to basically talk about the virtues of cryptocurrency and how they can be applied, or how you can invest in them, basically. A lot's changed over the last 12 months or so. This talk was actually a version of a talk I did in December 2019. And as I was updating it, I actually went through and realized how much had actually changed. There's a lot less crypto skepticism now than there was back in 2019. It seems like I'm obviously in a bubble of some sorts, because I'm seeing endless positivity around cryptocurrencies now, as opposed to various negativity when this talk was first given. I've updated the facts and figures and also added a couple more sections as well, because obviously COVID has had a massive impact on the cryptocurrency market for reasons you'll see later. But yeah, so let's get started. Welcome. Thank you. So today's talk will cover, one, what are cryptocurrencies and how do they operate? Some very basic stuff there. For those who are more advanced, this might be a little bit of a refresher. How they are important and why we really need them, why our societies and our financial systems really need to rely on something that is blockchain or consensus-based or cryptocurrency-based. And then finally, at the last part of the section, I'll be discussing how you can learn more and increase the likelihood of your profiteering from cryptocurrencies, which is obviously a very volatile, can be a very cutthroat market. In actual fact, its volatility is infamous. And actually, over the last couple of months, its volatility has been hardly anything of the sort that it was a couple of years ago. And it's kind of got a reputation now for being a little bit more stable. That may dissipate in the future, but we'll see how it goes. So first and foremost, really basic, what is a cryptocurrency? Well, a cryptocurrency is purely a string of cryptographically secured digital code which represents value. Okay, so for the first time ever in 2008, a gentleman called Satoshi Nakamoto figured out how to send value by doing something called consensus. Okay, and that means that there's a distributed nature grid working in the background basically to validate and corroborate transactions, which means that if I sent you a piece of code which is worth X amount, you can validate it and then transfer it or convert it into something else. And that is the entire blockchain Bitcoin network basically. Now, obviously, there are over 10,000 different types of cryptocurrency which use ultimately the same type of technology. Yes, there have been tweaks and different things happening behind the scenes. Some are faster than others, some are more ecological than others, vice versa. But Bitcoin definitely is still the main propaganda machine, if you like, of the cryptocurrency space. So it's a finite digital resource. Now, not every cryptocurrency is finite, but they usually have an amount that is released to the market at the present time. There are some other cryptocurrencies which are not capped or hard capped, as we say, but Bitcoin, Ether to a certain extent, which has an exponential decline, and Ripple, which are the three ones that I was focusing on for this talk, we have changed a little bit in the top 10 since then for various reasons, but we're now looking at that space as being a hard cap cryptocurrency. So what that means is there's a predetermined amount of every cryptocurrency. 21 million Bitcoin, for example, will ever exist. If someone wants to take that code and start a new project and mine 48 million Bitcoin, for example, they would need to start from zero, a zero value. And obviously, there are forks of Bitcoin, Bitcoin Cash being one of them, and the difference in price is very, very astute. The first time in history that anyone has been able to send value digitally, I've already referred to that. And cryptocurrencies are powered by blockchain technology. Now, what is blockchain technology? Well, we can understand blockchain technology, as I've already described, as simply a distributed ledger system, okay? We've had ledgers as long as we've had transactions, okay? If I wanted to pay some of my friends for a beer out of the garden in the pub at the moment, then they would mentally store that and that'd be a mental ledger for the next time to pay them back, vice versa, okay? Cryptocurrencies, blockchain is just a more controverted and convoluted version of that. Historically, banks have kept our financial ledgers, and they used to be done by people. Now they're done more so by computers using the Swift network, which was invented in 1973 and therefore predates the VHS. So some very clunky technology going on in the background there, which is why it can take up to 5 days to send and receive money. And it can actually be faster to fly a briefcase full of money around the world than actually use the banking systems and networks. And ever so often, as you can see on the red line there, there is an error in the system. 1 in 20 transactions actually fail for various reasons, human error, system error, etc., which necessitates insurance. And we pay for this every single time we use a bank. Obviously, banks at the moment, they're loss leading, okay? So our personal access to a bank is loss leading. But if you look at the amount of money that they make from mortgages, interest fees, credit cards, all their other services, their periphery services, they are by far the largest sector, financial sector in the world. And that's for a reason, because we all have to rely on them for our day-to-day needs, okay? With blockchain technology and crypto technology, that is starting to change, and never more than in 2020, when we saw the massive rise of decentralized finance, which I'll get to a little bit later. So this consensus mechanism happens all over the globe. Over 4,000 computers are now crunching Bitcoin transactions. There's even crypto transactions happening in space, because some of the data is sent to satellites that are processing blockchain networks. So, it's robust, basically, is what I'm saying. I'm saying it ultimately has more redundancy than Wikipedia, Amazon, Google combined, okay? So the computing power, the computing network, and the same with Ethereum as well, which has even more nodes, is actually really, really robust. So if one network goes down or one computing section goes down, actually, funny enough, this happened just over this weekend. China had a massive blackout of Bitcoin transactions. The price did drop around about $10,000, which, if you read the media, you would have seen was death knell for Bitcoin once again, just like the 400 other times. Yeah, if that network, that was a serious compromise of the Bitcoin network, and it still survived. Bitcoin is actually the only computing mechanism that has over 12 years of uptime, 100% accuracy, 100% no failure rate. No other technology has that track record at all. So the ledger system basically is global, okay, and includes every single transaction on its history. So you could theoretically go back in time and see any transaction in the network, which is powerful because it means for pseudo anonymity. So the transactions stay in the blockchain forever. So someone who's transacted Bitcoin back in 2013 can go back to that transaction and see it, see who it was sent to. They can even see who it was sent to afterwards. And that global web can actually be formulated. You can actually see transactions going through the network. This is why I know that Dogecoin, which has been taking the news recently as being a phenomenal coin to invest in, 65% of Dogecoins are actually owned by 98 people. Okay, so that's a massive skewed market there. Only 35% of Dogecoin are actually owned by anyone who's not directly involved with early adoption, etc. So there's a real kind of skew there, but we can see that because it's in the ledger system. Okay, we can actually go into that and see, oh, who owns that? Naturally, it's only a code. Okay, so you need to kind of do a little bit of detective work and work out whose code is what. But we can actually see it's an open and transparent system for exchanging value, which theoretically is, you know, unhackable morally and ethically. So cryptocurrencies are the application of blockchain technology to finance. Blockchain technology is not cryptocurrency. They are two very different things. You can have blockchain technology applied to hospital data, for example. You can have blockchain technology applied to supply chains and supply chain information. You can attach any piece of information that you want. We've seen this with the rise of NFTs recently, where you can have whole books, paintings, articles, even tweets condensed into cryptographic code, which can then be sold as if it's the real thing, okay, as if it's the tangible object. And we've started to see NFT art take off in that domain. So we can now basically digitize and send anyone any value whatsoever, which is a phenomenal game changer. Not only that, but royalty owners who create the content get a cut of all the next transactions. So if you sell a piece of artwork and it goes to 5 different owners, the original artist will get compensated depending on what rules they set up in the smart contract prior to establishing the NFT. So that's a real game changer in terms of art and kind of developmental processes. It's the most secure way of exchanging value ever created. There is no failure rate. If the system fails, the rules of physics have to have broken down. The rules of cryptography would have to broken down. It's completely automatic and does not rely on any human intervention whatsoever. And if you want to send a Bitcoin transaction, it can happen 24 hours a day, 7 days a week for a relatively small fee. Now, those fees have increased over the past year or so just because of the adoption. But, you know, if you are a millionaire and you want to send £5 million somewhere in the world, to use a bank, they would, you know, set you back around £50,000 to £100,000. To use Bitcoin, you can buy it for basically the price of a pizza. It's far less vulnerable to attacks and technological issues. Now, every so often we'll see a news story come out about the blockchain network having a double spend issue or a problem. No, there's been never a history of an issue. There may have been a forking issue, okay, but there's never been an actual history problem with the blockchain itself. And we've now got valuable assets trading on cryptocurrencies left, right, and center. So I mentioned pizza. This is a pizza. It was the first Bitcoin transaction. Back in May 22nd, 2010, someone wanted to exchange 10,000 Bitcoin for a pizza. And I mentioned it in my book in the first chapter. When I did this talk originally, the price was 150 million. It's obviously gone up a little bit then. So now that pizza is worth 400 million pounds. That's quite a trade-off. And obviously Bitcoin Pizza Day, look out for it, is May 22nd. So we have opportunity cost. Obviously, the person that parted, who was a developer, with that 10,000 Bitcoin lost the opportunity to have 400 million pounds. But at the same time, the person who received it had that opportunity. And that's what I'm going to be talking a little bit in this talk is, you've obviously turned up for this talk, you know, you see the opportunity there, but perhaps there's not the knowledge there. I did a poll on LinkedIn a couple of weeks ago, and the number one thing blocking people from investing or getting involved more in cryptocurrencies was a lack of knowledge, because it can be quite an intimidating space. So hopefully towards the end of this talk, you'll actually feel a lot more confident about that and you'll be able to take the opportunity at face value. So why is Bitcoin suddenly worth $50,000 and obviously fluctuating massively? Well, people value what they have in front of them at face value. That happens to be with pounds, dollars, euros, cryptocurrencies, etc. And what's happened over the past year is that companies for the first time have actually seen their balance sheets devaluing in other currencies. We've printed collectively as a globe 40% of all currencies in 2020. So if you had the total amount of currencies in 2019, it's now 40% bigger. So companies with balance sheets that might have Swiss francs or another currency have noticed the dollar rate literally yield and their profitability has declined. So therefore, they have been looking for a hedge against inflation. Bitcoin was designed as a hedge against inflation because it has a fixed amount of units. And obviously, it's systematically undervalued because it's the first technology and the only technology that has the proven track record of holding its value and increasing in value. In actual fact, a couple of days ago, there was another all-time high for Bitcoin, which means that everyone who had bought Bitcoin who had not sold was in profit. Okay. The only people who were not in profit had just sold out of fear, or they'd taken their profits early, or whatever it was. So if you'd held Bitcoin from day one until a couple of days ago, you would have been obviously phenomenally wealthy, but also you wouldn't have had any losses whatsoever, which is a really powerful thing. By the way, I don't think Bitcoin's rally has finished at all. There may be some turbulence, but I'll talk about a little bit about that towards the latter part of this talk. So what's going on? Well, we're going to treat Bitcoin as an index for the cryptocurrency space, okay? This is the value of Bitcoin way back in 2011 when it was first listed on exchanges, and it went from arguably nothing to $30 very quickly and then receded. We had the news stories back then of how Bitcoin was dying a death, as per usual. But notice the influx of capital is very quick. That's literally just because the market size is relatively small. And if a large amount of capital comes into it, the price obviously escalates. Okay. Next, we had 2013. Notice that really small dip on the left-hand side of your screen. That is the one we've just seen. Okay, so this is an exponential market. Okay, the next target was around about $200 or so, almost $300 in late 2013, and then once again we saw the tail off. Okay, and once again we were told by the powers that be that Bitcoin was dying a death and wasn't going to survive. Next one. Notice how small those movements are now in terms of the grand scheme of things. Once again, we've increased by powers, not linearly, okay? And we went all the way up to $1,100 and then sold off, and systematically people took their profits and did what they wanted to do. New people came in. All the time, the Bitcoin market is getting bigger and bigger and bigger. And then finally, well, not finally actually, because we actually had another one after this. But 2017, notice how small that dip is, went to almost $20,000, $19,600, sold off, and then went into what is arguably a bear market. And this is in alignment with the way Bitcoin is designed. It has what's known as a halvening process, which is where the systematic rewards for mining new cryptocurrency, new Bitcoin, if you like, are halved every 4 years. Okay, so that means the miners who are mining it theoretically would wait all the way until that price spike, and then systematically sell, which is why new investors who were coming to the market, usually when the media were going, oh my goodness, we were wrong about Bitcoin, let's invest, let's put everything in it, we're actually selling at the most inappropriate time to do so. The best time to get into cryptocurrencies is before they hit the media. Once they hit the media, it's kind of game over, because everyone's kind of aware that the price is valued in, basically. The value is priced in, as it were, okay? And then bringing this talk up to date, because we hadn't actually had this this movement previously. I actually had this slide in the previous version of this talk. It was purely speculative at the time, because it was actually planned this, the original version of this talk back in September 2019. So this was just me kind of guessing or working it out. But basically, I think we're on a very straight and narrow track to $100,000 per Bitcoin. Psychologically, that's quite a nice number to ricochet off of. And then it will settle down probably in the region of where we are about now, around about $55,000 for a little while, perhaps until the next halvening process, when upon it will climb even further, and we will see probably $500,000 to $1.5 million per Bitcoin by around about 2025 in that ballpark area. So what's going on? Why is cryptocurrency, one, a hedge against inflation, and two, why is it responding in this manic way where it climbs dramatically and then recedes? Well, every other type of investment that you can think of, I'm willing to guess, has what's called a linear relationship with the economy. Okay, we've seen this during COVID. Okay, the market climbs the stairs and then it comes down the elevator, basically, because one, panic, people sell out of fear. Okay, people liquidate their portfolios. A lot of these assets are actually traded on margin. If you weirdly think about it, the property market is all held up by margin, what I refer to as leverage. Okay, because of mortgages. Mortgages are, if not anything, a margin product, a leverage product, and that's why they've climbed so high. Interestingly, this year we've seen quantitative easing happen at an unprecedented scale. When I first wrote my book, I said that quantitative easing was a problem, and little did I know that just a couple of months later we'd be having the most exciting development of the financial system in terms of, from a Federal Reserve perspective, in history, because they needed to pump all the money in to keep the asset prices where they were. We're now in a situation, at least in the UK, where property prices have never been higher. In actual fact, they've never accelerated quicker, but that's because there's new money being pumped in all the time. Printed new money being pumped in all the time. With crypto, this can't happen. Okay, yes, you can mine new coins, perhaps with certain ERC20 tokens, and you can certainly, you know, create a new cryptocurrency, but if you've got a hard cap that is set in code, you can't do anything in order to increase. Maybe you can burn the tokens if you've got that option, but you can't actually change the supply. The supply is fixed. Safe haven assets like gold and silver, for example, are said to be capped, but yet we still keep on finding them. There's a rock, an asteroid in the Oort belt, which is currently worth $10 quintillion because of the precious metals that it has. So I don't know, NASA have a plan to go and mine that in 2024 effectively, or start looking at it in terms of a actual value proposition in 2024. So what happens if we suddenly bring something that's worth 10 quintillion back to the earth? We're going to have a complete meltdown of the markets. So what I'm trying to say is stocks and shares, property, bonds, etc., everything you kind of think of that isn't cryptocurrency related has this correlational risk, as it's known. So that's what happens. We've obviously had one very, very recently, where in March 2020, we actually had a complete meltdown. The S&P 500, Dow Jones, Nasdaq, etc., suffered huge losses, which were entirely brought back, and we're actually still technically in a bull market, believe it or not, in terms of stocks and shares, etc. That's weird, okay? Not only have we had a global pandemic, which has wiped out most companies' bottom lines. If you look at the S&P 500, look at the number of companies that are actually making profit, it's all technology companies, it's all companies at a distance, okay? The world has literally slowed down, and yet their stocks and prices haven't fluctuated to a large degree. Yes, they sold off and did a correction of sorts, but since their new money has come in, we've had obviously GameStop, and we've had Wall Street Bets, attacking the status quo of the world of hedge fund management, basically. But they've been doing that with artificial invented money that didn't exist in 2019, stimulus checks, effectively, basically. Okay. Why? Why does this happen? Why is this system designed in booms and busts? Why does it climb very gradually and then suddenly completely collapse? Well, correlational risk, as I say. Population growth is growing all the time. Okay, and the more population, the greater number of people you need to use a currency. Okay, in countries that don't have currencies, that's a real problem because you can't go out and buy anything, and that's obviously, well, poverty is a real big issue at the moment because they haven't got the infrastructure to support their economy. So the more people that use a fiat currency, the less powerful it becomes. That's by design. Okay, the more money it's printed, the less powerful it becomes. Whereas with cryptocurrency, the more people who use it, the more people who add money into the system from the fiat currency world, the more powerful it becomes. Okay, so there's kind of an inverse situation here. This is where asymmetric risk comes in. Okay, if you're able to spot high quality crypto opportunities before the general market does, using a set of techniques, a set of strategies, then you can theoretically put a small amount of capital in that, and it will accelerate and grow exponentially, rather than linearly. Okay, the exponential factor is what freaks people out, is what freaks traditional investors out. No property investor wants to come along and see their portfolios down 40% in the space of 24 hours. And if it does, then there's usually an insurance claim on the other side of it. In terms of crypto, though, that's perfectly normal. Okay, people, what's known as hodl, they hold on for dear life because the volatility is such that it's squared. It's not linear, it's to powers of, as we've already seen. Okay, so the property market is strongly correlated with the performance of the economy. That's kind of obvious. And a strong economy generally means higher prices. Okay, this is why we have inflation, 2% set annually. Okay, because we don't want asset prices to get out of step with the real world. The problem is inflation necessitates feeding more money into the fiat currency system. Whereas with asymmetric risk, it's akin to buying a classic car. No one really wants a rusting piece of junk that sat on someone's driveway for 10 years until someone comes along and thinks, that's not a rusting piece of junk. I can see that's got value in the future if this and this and this and this happens to it. They buy it for a small sum. They take it back, they work on it, they add value to it by restoring it, and then they go to a classic car auction where the person turning up to buy the car doesn't see that it was once a wreck. Okay, they actually see the value of the car and think, right, I'm going to pay 5 times the value that someone actually paid to buy it. Okay, so we're literally speculating here on the price. What something is worth to one person is not necessarily what it is to other, because we have different worldviews and we're exploiting that. And if you can adjust your worldview to compensate accordingly, for example, not investing in Dogecoin right now, theoretically, okay, because you know that it's only owned by 98 people, majority of the market. You also know it's at stratospheric levels, okay. If anything, theoretically, if you're really bold, you should be shorting it, which would be my kind of perspective if I was trading it, but I'm not willing to undermine Elon Musk, and definitely his Twitter followers seem to have a lot more capital than me. So I would rather not short that, but I'm digressing anyway. So this is what I'm saying. Price times time equals profit or loss. That's what happens in property, bonds, shares, ISAs equals, okay, that's why you get an annual percentage per year. It's price times time. With crypto, it's price to the power of Y times time to the power of Y, where Y is the total market capitalization. So if Y doubles, if Y, say, for example, there's a cryptocurrency out there with a $50 million market capitalization, and that goes to 100 million, then the price will double, okay? And that obviously works both ways, profit and loss, which is, and most people tend to think of loss in terms of this rather than the opportunity that exists to get exponential returns. And obviously the correlate, rather than the economy, is actually the number of users, okay? Cryptos used to be not really a thing that was discussed on mainstream media and didn't really tend to have much correlation. In actual fact, they had a negative or inverse correlation with the stock market. That has changed a little bit because more retail investors and more fund managers and more companies are now owning cryptocurrency. So they are literally just allowing for that correlation to happen. So the 3 main cryptocurrencies, Bitcoin, Ethereum, and Ripple, okay? They have changed a little bit since obviously this talk. There's now Binance Coin in 4th place, Tether, etc. And I'm excluding Dogecoin as well, okay, which is in the top 10, okay? So Bitcoin, Ethereum, Ripple are the 3 main cryptocurrencies that people tend to think of when they think of crypto, with Bitcoin obviously being the major one. When Crypto Profit was first published in 2019, Bitcoin was around $3,000, Ethereum was around $100, and Ripple was around 15 cents or so. Okay. Since then, we have gone stratospheric. Bitcoin's currently around about $55,000. Ethereum's around about 2,100, 2,200, and Ripple was over $1 recently. Okay, so we have had this influx of capital, despite obviously Ripple having its issues with the SEC, which are looking quite promising if I'm looking at it holistically. So the limits of cryptocurrencies, I've already said, 21 million Bitcoin. There are 18.7 million today, 120 Ethereum, okay, with 114 million today, and 100 billion XRP with 50% in circulation. Okay, so what I'm trying to say is these cryptocurrencies will continue to rise in value, but they won't necessarily give you stratospheric returns because, like you say, or like people have been saying, oh, the cryptocurrency party is over. Okay, there's nothing that can be had from cryptocurrencies anymore. Okay, and crypto is like the hexadecimal system. Okay, so what we're literally looking for is a small market cap cryptocurrency to suddenly become a large market cap cryptocurrency. And obviously the network is involved in that, okay? Whereas fiat currencies are like a balloon. They expand, they expand, they expand, they look really, really good, and then pop, they're gone, okay? And obviously they then have to start again. New investors come in, push the asset prices up again, okay? Boom and bust, a cycle, okay? Now, I'm not saying that cryptocurrencies are immune from that, of course, okay? They can obviously have booms and bust. I have personally invested in cryptocurrencies that cease to exist. Okay, a small amount of capital, obviously, but the risks are there. I've invested in other cryptocurrencies where I've seen 30 times to 40 times return. Okay, so you have to kind of weigh the risks with the opportunities. So the problem with fiat, as I've already alluded to, money used to be backed by metals, such as gold and silver. It used to be actually asset backed. When the pound was first introduced, it was worth 12 troy ounces of silver, sterling. That was why it was called sterling. Today, that's worth £222. Okay, so if the pound was the same parity of value as it was back when it was first minted, £1 would be worth the equivalent of £222. So the pound is now worth 0.05% of its original purchasing power. In fact, every cryptocurrency, every fiat currency rather, on Earth is actually on a race to zero purchasing power. There has never been a successful or a more successful fiat currency than the pound. Okay, so we're literally talking about the best performing one in this slide. So we call this systematic devaluation in inflation, as I already said, and central banks and governments target inflation at 2% per year. We'll see a little bit later how that's not exactly sticking to plan at the moment. So if you own a £50 note from 1981, then it's actually worth £12.95 today in purchasing power. And if you held it for 50 years, for example, you have a cash pension, which obviously isn't a particularly good idea, then £50 is worth £3. This is the purchasing power of the pound in graphical form from 1975 to 2015. Obviously, you can see it's effectively an exponential descending curve. And at some point, it will drop off completely. And what happens when that happens? Hyperinflation. Okay, we've seen numerous governments around the world go into hyperinflation. That's a stack of money there, a wall of money that will probably be only useful to buy a loaf of bread. Okay, so the actual underlying government promise to pay the bearer the sum of X amount of dollars or pounds is actually completely devalued. Why? Why is this? Well, the world is up-to-date figures, $281 trillion in debt, government debt. Okay, so this is money printing, basically. This isn't necessarily you and my credit card bills, etc. This is government debt which needs to support the economy. Okay, every man, woman, and child worldwide owes the equivalent of £26,000 just to enable them access to a fiat currency that is government-backed. It would take over 4 years of no government spending, so that's no health service in the UK, that's no road maintenance, that's no street lighting, that's no anything of that kind of nature, to actually pay that back in its entirety. And obviously 8 years if we did half, and 12 years if we did a third. Okay. So this is actually around the world inflation levels, and what you'll see is that there are actually 23 countries with an inflation level above 10. That means the price of a loaf of bread, the price of a car, the price of a house increases by 10% year on year. And obviously there are some very, very stricken countries at the top, South Sudan and Venezuela being one. Actual fact, Venezuela is actually one of the world's foremost cryptocurrency adopting countries. Okay, people are getting their salaries paid in Bitcoin or any cryptocurrency basically because it's more stable than their actual real fiat currency. And then obviously we're around about the 100 mark, bang on the 100 mark actually at 2.7% a year. Okay, so 997 million people, effectively 1.3 times the entire European geographic area, are actually living with severe hyperinflation, effectively. Okay, and there are 115 world fiat currencies. Bitcoin is currently at number, hang on a second, just let me go back. Bitcoin is currently number 14. So in terms of actual world currencies, there are 100 currencies that are worth less than Bitcoin. And obviously it's stuck at the moment between the Russian ruble and the Swiss franc. Okay. Now, why is that? That power, back in 2019, Bitcoin was 40th. Okay, so it's climbed massively since then because more people are adopting it. And it's now, some argue, too big to actually stop, which is obviously something that people are thinking about if governments come in and say they don't want to support cryptocurrencies anymore. Okay, they don't want the mainstream economy to actually have cryptocurrencies. So how can we stop this? The short answer is we can't. We could raise taxes to pay off the debt. Rishi Sunak in the UK did that just a couple of months ago with the budget, putting corporation tax effectively up to 26%. But it's not going to make much of a dent in the economy overall. We can switch to an asset-backed style of currency. Again, there's not really an asset that can take the trillions and trillions of units that we need that is actually physically present on Earth. Apart from maybe leaves or something, I don't know, but they wouldn't have any value. So we can't really do that either. The only option, theoretically, the end game, ultimately for fiat currencies, is to abandon them altogether and start with something new. Okay. Now, I'm not saying this lightly. I know that that's kind of a little bit conspiratorial, but that is genuinely, unless we really do figure out, kind of decimalization of debt, of previous debt, or countries are wiped clean of their debts, and we start again with a new fiat currency system, then maybe we do what the euro did in 2000, when 15 countries effectively switched to the euro and they were able to kind of take out new debt arrangements with each country. Without that, we literally are only having cryptocurrencies as our solution, okay? Which is why people, companies, especially at the moment, are viewing Bitcoin as kind of a savior, if you like, against rapid rise inflation. So let's turn to what everyone is kind of interested in, making money with cryptocurrencies. And systematically, everyone seems to think they've missed the boat. They seem to think that because they didn't buy Bitcoin at 10 cents, that's it, game over. Today's prices, believe it or not, even at 55,000, will still be legendary, okay? Back when Bitcoin was $10,000, people were thinking, oh, it's a bit expensive, I probably shouldn't invest. And now look, we're 5 times away from that effectively. So extrapolating out from a chart, we can see easily 500,000 per coin. I'm going to show you that chart now. So this is an all-time chart of Bitcoin, but it's logarithmic. It's not linear, okay? What that means is we're literally ricocheting off these levels, these price levels, okay? We saw the first peak, $100, back in my first slide. Then the second peak, $1,000, third peak. Believe it or not, this chart was actually done before the 4th generation peak. As you can see there, the price is about $9,000 when I actually did this chart. And obviously I had a price target of somewhere in the region of $80,000 plus. I'm still very, very convinced that we are going to see that before too long. I think by, late August, maybe September, November this year, we should see potentially triple-digit Bitcoin, okay? Remember, the price only has to double from where it is now in terms of percentage returns for that to actually happen, okay? So how can you profit? So investing now when prices are low, and low is a relative term here, obviously, is key. And trading in and out of the markets at key price points will help you to compound your returns, your investment, okay? That's the 2 things that I'm focusing on. I'm focused on buying low, selling high, really simple, really black and white, and trading in and out of the market based on the volatility. Because if you're not going to trade cryptos with volatility, then there's not really anything else you can trade that is more volatile. So expected returns for £1 by 2025, Bitcoin £5, Ethereum £10, XRP £20, assuming obviously everything else stays the same. These have been systematically brought down. In 2019, Bitcoin would have returned you around £40, Ethereum around £50, and XRP potentially as high as 100, although it depends on who you read, and obviously the centralized nature of Ripple is a little bit of a risk factor for that. So why buy near all-time highs? Okay, well, you've got to get in somewhere, arguably, okay, and major tokens such as Bitcoin, Ethereum, and XRP will continue to rise as measured in years, okay? They may have severe volatility. We'll probably have a severe correction of 80% at some point. When we see 100,000, we might come back down, scream back down to 40 or 30,000 even, which will terrify investors, make everyone fear the markets again. At the moment, it's a bit too much the other way. It's a bit too jubilant. It's a bit too euphoric. Everyone seems to think that cryptocurrency is the best thing since sliced bread in terms of making returns. For 100 times returns, though, those days are gone for the 3 biggest cryptocurrencies. You would need to look at altcoins for those kind of returns, and they are still there. They are still available to you, okay? If anything, they're less risky now than they've ever been, because the cryptocurrency market as a whole is such a broad dynamic now. It's $2 trillion. It's the entire market cap of the world's largest company, which is Apple, okay? Apple is worth $2 trillion, and so is the cryptocurrency market, all coins in. And these are smaller cryptocurrency, altcoins are smaller crypto projects with more risk, but with risk comes greater rewards and opportunities. And a lot of people think, as I've already alluded to, that cryptocurrency is over because Bitcoin's at 60,000, but they're actually missing the point entirely. of why crypto exists. So have I missed the crypto boat? That's a chart of a token that I own, that I'm invested in, called Dragon Chain. That was actually formulated and started by the Walt Disney Company back in 2014, 2015. It's a what's known as quantum resistant cryptocurrency. So it's literally an investment that I've got for 10 years into the future. And recently it's done around about 20 times return for me. So I'm happy making money there. And you might think, oh no, that's really high now, I can't invest in it. But actually look at the grand scheme of things. That's where we are. No, the boat is still in dry dock. Okay, we're literally we've moved so little, but because of the exponential returns, people are going, oh my goodness, I'm making money left, right, and center. It must be over soon. No, this market will go parabolic, and it hasn't really started yet. It started with Bitcoin and Ripple and Ether, okay? But there will be numerous other altcoins down the road that will also do your return, but you won't have to spend $50,000 to get in the market. You could spend maybe $100, $500, $1,000, $2,000 and make a proportionally bigger return. Another cryptocurrency that I've invested in recently, Polis, which is a masternode that I'm running, hasn't even moved. In actual fact, it's gone down. The fundamentals are still solid. The team is good behind it. Everything looks great, but it's just not moving yet. People aren't that excited about it, but it literally hasn't moved. There are cryptocurrencies out there, believe it or not, that have not altered or moved since we started this arguable bull run in cryptocurrency. The opportunity is still out there. And even the ones that have moved, this is a NEO chart, which is equivalent of an Ethereum, which is like a free Ethereum, I suppose, to use for exchanges. This is up for around about half of the way, okay? But generally speaking, returns tend to be around double or even triple the previous all-time high. Okay, so obviously notice that it's currently hovering around $60,000 for Bitcoin. There's no reason for that other than it's 3 times $20,000, which everyone in their head is thinking, oh, that was the previous peak. Let's not go above 60,000 before we really test it and see where it's at. So altcoins are riskier, but they're far more profitable. And there's both an art and a science to value altcoins. And a lot of this decision making has been made and can be made using tokenomics, as I already alluded to. With tokenomics, an investor examines the market cap, number of potential tokens, and potential growth with similar projects or other projects that are doing a similar thing to extrapolate future price potential. And understanding the risks is key, but 100 times returns are relatively common. Ripple in the last bull market did 14,000% returns, or 140 times returns. And I've personally invested in around 25 altcoins. The best performing have currently produced around 15 times returns. And many strategies and techniques can help lower the risk of loss, such as a crypto cascade, which I'm going to talk about is a proprietary technique that I'm going to be discussing at a later date. Thinking that you can only make money from trading crypto is like cooking a meal using only one ingredient. There are so many different tools now available to you: DeFi, yield earning, farms, etc. Passive income, lending your crypto out on a collateralized basis. There are so many different ways of generating revenue now that it's kind of a little bit weird to only focus on trading cryptocurrencies. So what I'm introducing Class. Class is a comprehensive membership which is for crypto investors. They are literally resources that I have spent time to develop and brought to market that are going to revolutionize the way that retail investors theoretically interact with crypto investments. Okay. First and foremost is the training module. I've spent a lot of time developing a 70-module intro investor program, which takes you through everything: how to buy and sell cryptocurrencies, how to store them, how to secure them. And there are 7 modules: buy and sell, secure and store, cash flow and cashback, trading and investing, tracking and tax, because obviously crypto tax, if you're making profits, you need to obviously be compliant, CeFi and DeFi, and psychology and crypto. And there are around about between 15 and 20 modules on every single one of those courses. So the Intro Investor program has 70 topics, like how to lower fees, how to access triple-digit passive income returns safely and securely, how to back up and store your crypto so you never lose it effectively, how to set up nodes and master nodes for passive income, how to use a trading plan and how to trade crypto more accurately, what to look for in the charts, buy and sell signals, etc. How to get crypto cashback and other passive income opportunities and leverage those to actually make more profits. So that's the crypto's cascade that I mentioned, taking crypto that you've made elsewhere from a node or cashback scheme and then putting it into small altcoin projects to potentially give you 10, 20, 30, 40 times return with no risk at all. Okay. So there are membership options, okay, to this. Crypto Convinced is the highest tier, and annual access for that is £4,897, and that's included with class. Then there is Crypto Confident, which is annual access to all the training programs. I should also note that the training programs will be updated constantly, and there'll also be new training programs coming to market for £497 with class for a £99 one-off payment. And then there's Crypto Curious, which is for new investors who are coming to the market, and that is monthly access for £49 with class as a one-off £99 payment. So I've actually tested these strategies out with people. I've had test members, and this is a referral, a testimonial I actually received relatively recently from someone. Over the last year, I turned 30K into a over 100K crypto portfolio, just using these techniques, and obviously in a risk mitigated way. Okay, so crypto can be a really good way to make profits. So what is class? What does it deliver? Okay, so for a one-off fee, you can get discounts on hardware such as wallets, Trezor wallets, etc. Discounts on centralized trading fees, access to all crypto training programs, priority and ad-free viewing of all Crypto Professor videos, including technical analysis videos, ongoing support via a community hub of other like-minded investors, 50% discount on one-to-one training and group support, including specialist seminars, free Ask the Professor email support, free Crypto Watch email, and Crypto Professor additional resources such as libraries, so books and resources and articles, and 10% discount on future courses, products and merchandise, and free crypto giveaways and more. And I'm going to be adding to this as the program develops, as it gets bigger and bigger and bigger. And I'll be offering more value to people who really want to understand their crypto investments and really know what's going on in the crypto market, but don't really want to, read the mainstream news or anything along those lines. So what does class cost? Well, it's a £99 one payment for life. That's it. You pay once, you have the service forever, as long as you have an active subscription to the training products, okay, which will obviously be updated on a routine and ad hoc basis. If you sign up for the class in the next 24 hours using the link www.thecryptoclasses.com, you will get a free copy of the Crypto Profit audiobook, which has recently been released and is doing rather well on Audible. And if you sign up for the class before May the 1st, which is technically the launch date, this is all pre-launch at the moment. It's still very much in development, okay? It's literally cutting edge right now, okay? You'll get a free 1 month using the code FREEMONTH at checkout. So if you go to the cryptoclasses.com, enter the code FREEMONTH, you'll get £49 knocked off your price, okay? And I'm limiting that to the first 49 people who sign up. Okay, this video will be going on YouTube shortly after the talk today, and I want to get my first kind of 49 people through the door so I can actually scale up that test that I mentioned with the gentleman who made £70,000 in around about 9 months or so. So thank you very much for listening. I hope you've enjoyed my talk. I now welcome any questions that anyone might have.
Thank you so much, Peter. Very, very insightful. I've learned a hell of a lot, and I'm still sure that there's a hell of a long way to go, which I'll be picking your brains on. But thank you again, and please do get in touch with Peter, connect with him, and look up the cryptoclasses.com. There are a few questions, but please do put some more questions in the chat if you would like to get any points across to Peter. One question that's come up, I'm going to go to first, actually, is the one that Matt has mentioned, which was one that I wanted to ask you anyway, given that we had last week, we did a sustainability event, and sustainability and crypto may not ordinarily go hand in hand, given that there's talk of cryptocurrencies using the same electricity of Argentina, for example, annually. How do you plan to negotiate the inevitable backlash against the environmental costs?
Sure. So it's interesting when the sustainability mantra comes up, people pick Bitcoin and they don't really extrapolate it to other cryptocurrencies. There are much more compliant and socially viable cryptocurrencies. Energy is one of them. Okay, it's actually a cryptocurrency for consciousness, for energy conservation. Okay, but Bitcoin, comparing Bitcoin and looking at Bitcoin in sustainable terms is like looking at the Wright brothers' first plane and saying it doesn't fit many people on it. That's literally what we're looking at. And obviously today we've got much better technology, much better systems. Remember, Bitcoin is designed to get inherently more energy inefficient the longer it exists. Okay, and the more people that are pumping money into it to try and mine new cryptocurrencies, the harder and harder it becomes. If we ever get to a point where Bitcoin becomes proof of stake, which is unlikely, but that may happen, then the energy efficiency will actually drop considerably. It's that arms race to try and get the next Bitcoin in the market, which is causing the environmental impact. And yes, any technology has an impact on the environment. And if we look at the car, for example, if you could have wound back the clock 100 years and bring people from 100 years ago and bring them to today and see the cars on the motorway, they'd be thinking, goodness gracious me, think of all those emissions that are happening. But we don't give it a second thought because it's part of our society. Okay, with Bitcoin being so new and revolutionary, people are now going, you're running a server farm, and that's costing how much and contributing how much CO2. But there are actually ways of doing it with renewable energy. There was a plant started recently in the North Circle, for example, which is effectively carbon neutral. Okay, so I think it's a little bit like judging something being too soon to market. People haven't been thinking about sustainability with Bitcoin, but they now are, and it's entirely possible to run the Bitcoin network sustainably. And even if Bitcoin needs to be run sustainably, because there are alternatives which have better CO2 profiles.
Thank you, Peter. I hope that answered your question, Matt. There is a question from Dio, which is, any thoughts on crypto trading bots?
Yes, crypto trading bots are great until they're not great. They obviously have rules, and we're not in a position at the moment to have artificially intelligent robots in the same way that a trader could actually do it. So they're great for scalping, fantastic for scalping. If you're in bed and 2 o'clock in the morning, a crypto decides to skyrocket, it will take you out of the market. But in terms of actually managing black swan events, for example, they're not, you have to keep a very close eye on them. Okay, it's effectively like babysitting your trading. Basically, they're great if you want to have a massive portfolio of cryptocurrencies. Crypto Hopper is one of the main market leaders in algorithmic trading, but they generally tend to be not as sophisticated as you would hope them to be. And also, if you want them to be sophisticated, then you're going to have to spend or hire someone who's got a machine learning PhD, and it kind of becomes a little bit not really worth it in the grand scheme of things. But I think it's an interesting space that we're going to watch and develop. And obviously, there will be modules on class on algorithmic training and robotic trading effectively, because obviously it does take a massive element of time out of any day trader's life.
Thank you very much. And there's a question from Kieran, who has asked, what are your key indicators to look at when bull market is peaking? And is there any opinion on EGLD, Dent, STMX audio? Okay,
so I'll ask the first question. In terms of it, I take a psychological approach, really. Obviously, we're in the market cycle at the moment. We're kind of in a euphoric state where we're kind of testing the water to see whether things are going to go higher or not. And I think we're currently in a correction of sorts. Notice that most of the volatility, as in downward volatility, tends to happen at weekends as opposed to during the week, which suggests that it's retail traders, particularly margin trading retail traders, that are taking the heavy hits. I don't particularly have any opinions on the cryptocurrencies that you've just asked, but I would be willing to take a look for you. Dent in particular is one that I've been curious about for a little while. But in terms of the market dynamic and the market cycle, obviously Bitcoin is currently very prevalent in the media, and a lot of people are just going, well, you know what, I'm going to take some chances. And that's usually a time to be a little bit risk adverse. I suppose I'm not really trading the main market assets at the moment because I'm looking for a better risk to reward ratio, but there still are plenty of opportunities for investors who just want to kind of day trade, I suppose, the main market leaders.
Thanks, Peter. That was from Kieran. I'll connect you up with Peter. He's a founding member of Legacy Club, so it'd be good for you to chat about Dent in particular. And there's a question from Montgomery's, but in regards to your book, you have an example of shorting positions of Bitcoin and longing to earn 55%. Can you describe or show it visually?
I believe in the book there is a graph, a chart of actually a trading volatility. That 55% actually came from the fluctuations in price, and the point of it being that the price did this effectively if you were just hodling, whereas the volatility allowed returns of 55%. That was actually traded on Kraken at the time. So yeah, there was actually a chart in the book of that. And going long and short is obviously something that most derivatives trading platforms allow you to do, BitMEX being one of them. Okay, and obviously there's a lot more derivatives trading platforms out there now. But yeah, there was actually a chart in the book.
Thank you, Peter. And there's a question from Sam. What are the top 5 industries that will adopt crypto?
Obviously, finance being one. In terms of, it's more blockchain than crypto, to be honest with you, because crypto is obviously a very, very deliberate, intensive use of blockchain technology for finance. So I can see the payments industry, for example, being disrupted next. Okay, obviously paid card payments, that kind of thing. 10 years ago, no one had heard of Square or iZettle or anything like that, and the banks had a really domineering effect on the payment system. So maybe the next transition of that, and obviously Square being really on the crypto side of things, is actually, and PayPal, for example, so online payments is probably going to be the next big movement in crypto. And then probably asset finance and that kind of thing, you know, car payments, that kind of world. Okay, you can now lend cryptocurrencies out with no credit checks. Okay, and you get capital back. Platforms like Nexo and Cell, for example. So maybe the entire managed money market. So effectively, if you go through a bank's balance sheet, those are all the primary targets, mortgages, etc. You know, those are the literal targets of the cryptocurrency space in the next, you know, DeFi, for example, in the next 5-10 years.
Thank you very much. And you'll be pleased to know that I think Neil has already become a paid member whilst we've been online. So that's good news. There aren't any more questions at the moment, but actually there's another one from Dale. Based on the high volatility in the crypto world, is trading options on crypto a viable strategy?
Yes, 100%. Crypto derivatives were recently banned in the UK for retail traders, but it's fairly easy to set up an account and call yourself a professional investor. You just have to self-certify, basically. But yes, The Tao of Trading is probably one of the go-to books that I would recommend for options trading. And obviously, options trading is a world of its own. I'm more comfortable and talking about the world of spot at the moment. Obviously, I will get to a point where in class I will be talking about options trading, because it's effectively margin trading, of course, without having to front up a lot of the capital. And obviously, if your trade goes wrong, you just lose your. It's very much like the type of investing that I recommend for altcoins. Actually, you either get a profit or you don't. It's very binary, similar to options trading. But yes.
2 more points. Any top alt picks for the rest of the cycle?
Sure. Syscoin is something that I've been following for a very long time. Dragon Chain, another one. Horizon is another crypto project, a sidechain project that I've been following. Obviously, Polis as well. Energy. These are all kind of cryptocurrencies with a market cap of around about 50 million that I started invested in. And I'm kind of looking for 20 times return. So I'm looking at them to go to 50 million to a billion, ideally, as the growth of the cryptocurrency sector unfolds. I have about 25 to 30 projects, and perhaps I will put an email together in Crypto Watch about those over the next couple of weeks.
And one more point from Ian, who's also a member. Do you have any thoughts on the SEC situation and how you think it will impact the other coins like Bitcoin?
So the SEC is primarily targeting Ripple because they sold $1.3 billion of Ripple in a very similar way to how you would sell a security. And obviously, if we're being really cynical, the SEC want to cut. If we're not being cynical, then that's illegal, basically. And the SEC have targeted Ripple for that basis. Bitcoin and Ethereum had their day, but it wasn't as controversial because they're obviously decentralized. There's no, apart from Satoshi Nakamoto, who no one knows whether he's alive or dead, or who he is, even if he's a team of people. There's no one profiteering necessarily off the back of Bitcoin, which is why arguments that it's a pyramid scheme don't hold water, because there's no one at the top siphoning off profits. Okay, it's everyone involved in the ecosystem that is either losing or gaining money. Ethereum, similarly, it's a massive decentralized network. There's no one person. Maybe you could argue that Vitalik Buterin is getting wealthy off the back of it, but if you listen to him and his talks, his motivation is nowhere near about profiteering. He could have already sold out many times over the last 5 years if he was purely interested in profiteering. His drive is coming from creating this ecosystem, which is a worldwide computer. So I think the SEC don't really have any kind of way of attacking Bitcoin and Ethereum. Perhaps other tokens, CRO, for example, might come a little bit under hot water, maybe voting tokens like Nexo or something like that. But I think the world of crypto is very, very aware now of what to avoid that would trigger the SEC into an investigation, because obviously that's not great. If cryptos were investigated by the SEC, I don't think Bitcoin would bother. I think it's literally just something that concerns that particular crypto project.
Brilliant. Thank you very much, Peter. I'm sure that everybody that attended today will find that this has been a super useful session. I certainly found a lot of value in it. And if anybody does want to reach out to Peter, please feel free to do so. If you'd like to know a little bit more about Legacy Club and how we are supporting entrepreneurs and founders on their journeys, regardless whether you're startups, scale-ups, SMEs, please head to legacyclub.co.uk. Our next event is next Tuesday, which is a bit of an interesting one. It's Dragon's Den versus Apprentice. We've got two successful entrepreneurs from either show who will be going behind the scenes and giving us a little bit more insights to their experiences and what the future holds for them. Please do keep in touch with us, follow us, connect with us. And if you've got any questions, you can get in touch through membership at legacyclub.co.uk. Myself or Peter are always available to see if we can help. There is one more question, actually. There was a couple, if you're happy to take them, Peter.
I'm happy. Yep.
Paul Dobson has asked, what is a realistic price of XRP in the next 2 years?
I can see XRP exceeding its previous all-time high of around about $3.50. I would then expect it, I think double-digit XRP is a bit of a stretch, but I can see it exceeding that, perhaps settling around about between $4 and $5, or 0.68 above its previous all-time high from a technical analysis perspective. So around about $4 to $5 long-term.
And there's one from Faz who has said, Bitcoin aspired to be a traceable payment system. Given that the liquidity is limited, surely Bitcoin cannot achieve its original goal. If we still need to pay with Bitcoin with real cash, doesn't this make a mockery of crypto?
Not necessarily. I don't think, obviously we've got Bitcoin Cash and Bitcoin Satoshi's Vision, which are, all cryptocurrencies that are forks of Bitcoin. Bitcoin isn't really designed for small payments. I mean, if I send £10 of Bitcoin to you, I'll pay £15 in fees. So it's actually not really, it's not viable at all. I think that Bitcoin has been kind of the propaganda machine, as I say, for cryptocurrencies in general. There are much better ways of transacting value. Whenever I exchange capital from one exchange to another, I use XRP or I use Neo, because the fees are usually less and the transaction times are pretty instantaneous. Okay, I don't use Bitcoin. I don't even use Ether, because obviously the fees are higher with that as well. Okay, so I don't think it makes a mockery of them. I just think that in order to fuel cryptocurrencies development as a whole, the fiat currency system obviously has to be there, but they will get to a critical mass where the value that is derived, the number of people, there are only 100 million people in cryptocurrency at the time of this recording. By the time we get to a billion and a half, it will become very obvious to many people that the fiat currency system is very inferior, and the cryptocurrency system, in whatever way you want to interact with it, is superior for whatever financial purpose you want to use it for.
Fantastic. Thank you so much. As you can see, there was a lot of value and there's a lot of questions as well. So thank you so much, Peter. And thank you to everybody that attended. If you'd like to hang around, we are jumping over to the social lounge area for some networking if you've got time. But thank you again to everyone. And thank you, Peter.
Thank you very much, Chris. Thank you.